What's going on, ladies and gentlemen? This is Danny from Markets Protocol. In this video, we're going to talk about market structure, highs and lows. So this video is going to be a remake video of VidStyle, explaining it with a little bit more simplicity here and less time consumption as well. Okay, so without further ado, let's get started over here about market structure, highs and lows, which is a very, very interesting topic. Okay, so before we get started, I just want to mention, just take notes on this topic, okay? This is fairly a new concept that I'm trying to introduce to our audience here on YouTube, as well as members of Discord as well. So the best thing you can do at this time is take notes on this topic as well. All right, so let's get started over here, okay? So first, we will talk about hypothetical examples, okay? First, let's talk about a bullish candle. Okay, so a bullish candle has a body, bullish, of course, and then you have, a high and a low of that candle. Then you have on the other side a bearish candle, which also has a high and a low. Okay, now what is bullish trend known for? That's the main thing. Okay, number one, bullish trend is known for making the highs. Okay, uptrend. Okay, bulls try to push the market to where? To the upside. So highs will be important for the bullish candle. Okay, this is what we have to write down just to keep it simple. Okay, number two, bearish candle. However, bearish candle is known for what? Bearish trend, of course, where the lows are important here. Okay, so what do you have to remember in terms of, market structure is whenever you see a bullish candle printing in any trend, either an uptrend or downtrend, the highs of the bullish candle will be stronger. Okay, so let's mark it up as stronger highs here. Stronger highs, okay, and the lows of the bullish candle will always be weak, okay, regardless of the trend. The trend could be bullish or trend could also be bearish, okay? So we will have weaker lows for a bullish candle. This is what you have to remember, okay? And this could be taking place in any trend of the market, okay? So any trend of the market. That means we could be trending to the upside. That means we could also be trending towards the downside. Okay, so things to remember for a bullish candle when it comes to market structure, putting it to context, the lows will be weaker and the highs of the bullish candle will always be stronger highs, regardless of the trend. It could be trending up, it could be trending towards the downside. Okay, and lastly, bullish trend, highs are important, not the lows. Okay, now let's talk about bearish candles here. Okay, now for bearish candles, what is bearish trend known for in the first place? Right, you probably heard the famous terms bears taking over. So bears are known for pushing the market towards the downside. So lows will always be important and stronger for a bearish candle, regardless of the trend. Okay, so for a bearish candle, you will always have stronger lows here. And as you can guess, the highs of the bearish candle will not be important. That means we will have those weak highs. Okay. Perfect. And once again, that could be taking place in any trend. In any trend, when you see a bearish candle, just know the lows will be stronger and the highs will be weaker. So this is the plain introduction to this concept here. This is what you need to remember. This is what you need to write it down to visualize it. Okay, keeping that into your memory and coming back into the next session here. Okay, now let's talk about the market examples here. I will show you on the higher time frame, and I will also show you on the lower time frame. Just remember, these concepts will be stronger on higher time frames. So let's say, for example, we are looking at the daily time frame. Okay, the highs and the lows which we will point on this example will be stronger compared to the lower time frames. Okay, so we will talk about that more extensively too. But let's talk about examples first. Okay, what do you see here? Trend going towards the upside. This is an uptrend. So what this means is whenever price is trending towards the upside, the highs will be stronger here. As you can see, every time price is trying to break above the previous highs, we are creating newer highs. Okay, so every time you break a stronger high, that's a confirmation for price to move up, right? As long as you have a clean range on the left. Okay, however, when it comes to lows, lows will not be stronger for bullish candles. This is what you also need to remember. Now, let's talk about the highs here in terms of structure. You have to put this into a context to make sense out of it. Other than that, that's going to be weak to understand. Okay, so we're looking at daily time frame on gold. What you can see is, price created a high here, created a high here, also created a high here, and also a high formation over there. Okay, so let's talk about the highs here. As you all remember from the previous example, the highs of the bullish candle will be stronger. So as you can see the structure, this is a structure high. Okay, we're not just talking about one candle here, we're talking about the structure overall. Okay, this is a swing high. Looking at the high, which has the highest point here. Does the bullish candle have the highest point or the bearish candle has the highest point? As you can see, it is the bullish candle which has the higher high compared to the bearish candle. So which high will be stronger here? The bearish candle high or the bullish candle high? Since the bullish candle high is longer and higher than the bearish candle, this will be the bullish high, which we have to consider, right? So is this a stronger high or this is a weaker high? Since it is made with a bullish candle, it will be a stronger high over here, ladies and gentlemen. Okay, now let's take a look at the second example over here. Okay, this is another structure high over here, a higher high compared to the previous one that we talked about. Now, look at the highs here. We have a bullish candle, bearish candle, and then another bearish candle. Which candle happens to have a highest point? Bearish candle. So we talked about bearish candles. The lows of the bearish candles are stronger, but not the highs. So this structure high will be considered as a weak high over here. Okay, let's talk about the next one over here, right? We have a bullish candle and then we have a bearish candle. Okay, let's clarify and see it more properly here. There we go. What do you see? Do you see the bullish high, which is highest, or the bearish high? Bullish high, right? So this will be considered a stronger high due to the fact that it is made with a bullish candle. So strong high. Okay. And the previous example, we had the weak high there. So let's put it down there. Line it up perfectly. There you go. Okay. And lastly, looking at gold chart over here on the daily time frame, you have a swing high once again right over here. But if you look at the highs, we have three highs there, one with a bullish candle, another one with a bearish candle, and the third one with also a bearish candle. So which has the highest point? The highest point is made with a bearish candle. So bearish candle highs will be weak highs. So let's mark it up as a weak high. Okay. Perfect. Okay. So we have the high made, the first one with the bullish candle, stronger high. Looking at, oh, sorry, I wrote it down as a low. It's not a low. My apologies. This is going to be a weak high. Perfect. Okay. The second high is made with the bearish candle, so it's going to be a weak high. The third high over here, it is made with a bullish candle, so it's a strong high. And lastly, the fourth high created here is with a bearish candle, so it's a weak high. Okay. Now, since you understand that now, let's talk about the lows, for example. Okay. Now, looking at the lows here, ladies and gentlemen, what do you see? A low is formed with a bullish candle. Okay, so is that going to be a weak low or that's going to be a stronger low? Once again, bullish candles are known for their stronger highs, not the lows. So it's going to be a weak low here, which could be taken out in the future, of course. Okay. Now, Whenever price creates a weaker low, there's a very high chance it will come back to retest those lows because that bullish candle has liquidity in the bottom. Okay, whenever you leave liquidity on bullish candles, there's a very good chance price will come into this area or come near to retest it at least to possibly create next time a stronger low. Okay, so we had the weak low previously made with that bullish candle, and then we came back to it again. This time we have pretty much equal lows, but since we have a bearish candle there too, this will be considered a strong low there, and the demand for price will pick up from there. As you can see, price trended towards the upside. Okay, now in the future, this low could be intercepted since it's a weak low. Okay, all right, now let's talk about this low here. Is this low created with a bearish candle or a bullish candle? The lowest point, it is with a bearish candle. So bearish candles are known for their stronger lows. So we have a strong low over here. Okay. Let's talk about this low here. Is this low created with a bearish candle or a bullish candle? Bearish candle. Once again, you have strong lows there. And lastly, looking at this low right here, this is a strong low once again because it's with a bearish candle, so it's going to be hard to break. Looking at the previous daily candle from Thursday, we closed bearish, but we did not break that low. What happens when you take out strong lows, ladies and gentlemen? This is the main concept too. If you do end up taking the strong lows out over here, then there's a probability we're going to continue towards the downside. Okay. This is what you need to remember as well. Stronger highs taken out, stronger reaction towards the upside, stronger lows getting taken out, stronger reaction towards the downside as well. Okay. Now, let's talk about examples on lower time frames. Today is Thursday. I'm making this video on Thursday. Today we traded during New York session live. Okay, we took trades in the New York session too, based on structure happening from the 1 hour time frame, dropping down to 5 minute time frame, and executing trades today solely based on market structure highs and lows, if they were strong enough or not, or if they were weak enough to, possibly look for sells. So this is what we did today. Okay, so let's look at the market previously where this happened. Okay. Okay. Let's bring it up. Where did it happen? This is 30 minute, 1 hour time frame. Perfect. So looking at the 1 hour time frame when we came this morning in New York session, ladies and gentlemen, we had price in a consolidation over here. Okay. Consolidation price between 1820s and above, and support was at 1812. Okay. So technically, whenever price is ranging, it will technically bounce off of the support, go back to the top, bounce off of that resistance, and go back to the bottom. Okay, we had a medium impact news for United States today, which is unemployment claims, which were less than the previous, sending the price below the support, breaking below support to start off a strong trend towards the downside here, ladies and gentlemen. So based on this idea, we took trades on the 5 minute time frame. If you did tune in today on the live stream, you know exactly what happened and how we took those trades. Okay. If you happen to not watch the live stream, that's okay. If you want to watch the recap how we took trades today, definitely, worth watching here. So, go on the past live stream from a December 22nd. Yes, December 22nd. Let's bring it up. Yeah, December 22nd. We will come back to it. We will take a look at it later. Okay, but for now, let's go back on the examples here. Okay, so based on 5 minute time frame, ladies and gentlemen, we came into a major rejection zone on the 5 minute time frame, which started off the beginning of the sell here. Okay, looking at the structure closely, what we have is the structure right here. Okay, if you see the highest point of this market, this high was formed with a bullish candle. So we have a strong high over there on that structure. Okay, also we have formed a rejection zone. looking at the wicks on this side. So what this means, whenever price comes into here, it could reject, and when it comes into here again, it could reject unless it breaks above those previous strong swing highs made with bullish candles. Okay, so the start of the sell happened right at this area. Okay, price trended towards the upside to grab liquidity. Okay, rejected, closed bearish. We had retest. We took out the previous strong lows here for market to start trending bearish. Now that big candle there is with a news candle at 8:30 a.m. Eastern Standard Time. Price trended towards the downside with the news. Okay, so it started trending towards the downside, and we started looking at the market structure here. What we had for the structure, we had these lows here. Looking at the lows, these are stronger lows made with a bearish candle. This is a also stronger low made with a bearish candle. So we have previous double bottoms here. Okay, if this is double bottoms and price wants to reverse, go towards the upside, then neckline resistance was at 1820s. We did not break 1820s due to the strong highs here. News came in good for the US dollar. We trended, changed the structure, and went towards the downside. Now let's keep the story short here. What happened and how we took trades based on market structure, highs and lows here. So with the news, we took out a major support here, ladies and gentlemen. This was 1813, 1812 area that we had to break for price to continue towards the downside. Okay, so as we started to price in the news, as we we're going towards the downside, we started looking at candles, big candles coming down. We have done a retest. Okay, now if you remember, I talked about a bullish candle, right? Previously. Now, bullish candle in any trend, either in an uptrend or either in a downtrend. The bullish candle's highs will always be strong highs, and bearish candle highs will always be weak highs here. Now, looking at the structure here, what do you see? The bullish candle has a high here, which is a stronger high. Okay, so this high should not break. If you break a stronger high, we're going to create support above it and continue towards the other side, and your selling idea will be invalid. Okay, this low is created with a bearish candle, which market took out, closed below it. Next candle took out the lows. Again, we went towards the downside. But let's talk about where we took the trades here. Okay, now these are previous lows that market had to break to continue towards the downside. Okay, lows created here. So we need a sort of retest at this area. Looking at the retest of this area, the retest is done with a bullish candle, the highest point. So we have stronger highs on this retest here. So as long as price does not break these highs, we can expect price to take out the weak lows. That bullish candle has a stronger high, but the low for the structure this time, it is created with a weak candle, which is a bullish candle. Lows will be weak of the bullish candle. So based on that idea, what I wanted to see is price retesting this. We have resistance forming here. We have another candle closing bullish. Now, as long as price breaks the previous two lows, expecting the weak low to be taken out as well. Okay, based on that idea, executed a sell order over here. Sell stops were used. Once price broke below this area, expected price to move towards the downside. In that trade, we secured over 12 pips. First opportunity. Now, the problem was during that trade is candle closed with no wick in the bottom here. No range for the next candle to continue going bearish. So the best thing I do, I manage my risk. Actually managed the trade there, which is securing partial profits. 50% of the trade was closed and the stops were brought on the break-even stage. Okay, actually it was brought on that candle there when it had no wick on top. Okay, if it goes up to break its own high, since we have no range, I will get stopped out and I will look for further sell opportunities when the structure develops. Okay, so I simply waited. What I wanted to see was either a retest coming into this area first. Okay, price retest this area, and once we create resistance into this area, expected price to move down. Since the volume was high, we definitely closed bearish after the wickless candle. Okay, once we close bearish here, every bearish candle will have a strong lows. Okay, So why this candle is so important? This candle is important because the previous candle before that had no wick in the bottom. So either this candle rejects, goes towards the upside for a retest, and we wait for confirmations later on, or normally after wickless candles, we see another candle closing bearish with a wick on top and the bottom. This wick is important too because it has retested the previous structure or the previous zone. Okay. Below this candle, we have the zone on that bullish candle. Looking at this candle, it came into the zone, rejected, closed bearish below the range of the previous candle. All we have to wait for is for the next candle over here to take out the lows of the previous. Once price took out the lows, now once again, the lows for the bearish candle are stronger lows, looking left clean range. So expected price to further drop towards the downside. Okay. Once price broke those lows, that was my confirmation to enter. Once again, use the sell stop there. Expected price to drop, and price dropped all the way down to 1800s. 1801 was the area where I set up my take profit and secured the trade there. Now, looking at the size of the move was about 50 pips and above, and stop loss area, keeping it on the current candle, was only 7 pips. Okay, so risk to reward is much better if you try to understand, the weak lows, weak highs, and stronger highs and stronger lows. Okay, so today's trades were solely dedicated towards the market structure. Okay, we took trades today based on the weak highs, weak lows, and strong highs and strong lows. Okay, so this was a bit of an example of how we implemented this into today's market structure and today's trading. Okay, hopefully this helps you, give you a little bit more clarity into the concept of market structures. However, if you guys want to watch a extensive video on this specific topic, I would suggest you go on one of our very good friends' YouTube channel over here. He has a very extensive video made on this market structure, how to identify stronger highs and stronger lows, weak lows and weak highs. So if you want to watch it, I would definitely suggest you to join our Discord channel. The link to the Discord is in the video description. So this video you're watching right now, there should be a Discord link to it. Once you enter Discord, you can go on Discord and click on Forex Education there. It's absolutely free to use. All you have to do is verify your email and you will have access to Discord. Once you go in Discord, go on Forex Education and click on VidStyles video. Okay, it will say VidStyle here. How to identify market structure, highs and lows. This video is an hour long, so if you want more in-depth examples and explanations on this topic, I would say give it a chance over here, give it a shot, and you will definitely see more information there. Okay, so with this, I'm going to conclude this video on market structure examples. Hopefully this video gives you a little bit more simplistic view into this topic. And until next time, ladies and gentlemen, take care, trade safe, and let me know if you have any questions in the comments down below, and I'll, definitely give you feedback. Until next time, ladies and gentlemen, trade safe, and I'll see you next time on the live stream.